after a nice reprieve yesterday, we're right back in a world of hurt. We desperately try to figure out what kind of stocks can work in this environment. For example, what about the regional banks? These are fully domestic companies that don't have many direct tariff concerns as long as the trade war doesn't cause a full-blown recession. Something that's still very much a possibility, I fear. Take KeyCorp, parent of KeyBank. That's a Cleveland-based bank with an underappreciated capital markets business. This stock's fallen from $20 in late November to $13 and change today, solely based, I think, on worries about the broader economy. Now, the company's currently in its quiet period ahead of its next earnings report, so we're not going to talk about the numbers. That comes out next week. But the bank's leadership was in the building today to ring the closing bell in celebration of their 200-year anniversary. I think it'd be a good chance to catch up, see what they're thinking. So let's check in with Chris Gorman. He's the chairman, president, and CEO of KeyCorp. Mr. Gorman, welcome back to Mad Money.
Thank you so much, Jim. So great to be here.
Well, first, congratulations. Not many companies have made it this far. What is the formula for success to get to be around this long?
Well, I think one of the things, and it's our current teammates and it's the teammates that came before us, is just really being resilient. And you think about all the different markets, being able to take advantage when there's market opportunities, and also positioning the bank through a range of conditions. And so I'm just so proud to have the privilege of leading this team as we celebrate our 200th birthday. A couple interesting stats you might find.
Sure.
In 1825, there were only 24 states in the country, and there were only 11 million people. So that kind of puts it in perspective of how we've been, along for the ride, so to speak.
And a lot of banks in Ohio have not made it this far. There have been a series of legendary Ohio banks that have failed, but you've always kept your credits tight, and you've always stuck to your knitting, which is in many ways the local bank of where you are.
Mm-hmm. Absolutely. And one of the things that enables, I think, banks to be really resilient, it starts with having a lot of liquidity and a lot of capital. And we, fortunately, are well positioned from that perspective. And also, we're well positioned as we look at the rest of the year. So I think being resilient, taking the long view, really being client-centric, I think all those things have helped us.
All right, so I want to bounce something off you. And you're a person, when I heard you were ringing the bell, I said, what a great opportunity. Do you think that a year from now, in light of what's going on in Washington, we'll be thinking much more about companies that are American companies, not international companies based in America, and that the companies that are American will do better in the marketplace, maybe even get a higher price earnings multiple, because they're not entangled with places that this current president wishes we weren't?
Well, I don't think there's any question. If you think about COVID and you think about the disruptions in the supply chains, I think the notion of reshoring is real. And reshoring will probably be, most people will have most of their supplier base in Mexico, the United States, and probably Canada. And so I think there's a huge opportunity. Most of our customers, clearly are global customers, but many of them are thinking about reshoring and how they get their supply chains. And I do think a year from now, there'll be more activity in the United States.
It does seem that both the president, during his campaigns in Pennsylvania and Ohio, and the vice president, from where he's from, uniquely understand the travails of people in the state of Ohio, the number of plants that have closed, the kind of destruction that happened in communities. Do you see any of that coming back?
I do. I think you'll see companies continue to flourish, but also the economy's changed a lot. So in spite of the fact that, yes, there's a lot fewer factories, but you think about medicine, you think about pharmaceuticals, you think about finance, a lot of the economies in Ohio have changed. I'll tell you, though, we in Ohio have been very successful of getting people to actually move to Ohio, companies to move to Ohio. And so it's been...
Give me some examples of
what so there's, for example, the Intel investment.
Right.
Huge investments by companies like Google and Amazon in central Ohio. And so actually a stat came out, Jim, that Ohio is the second best place to do business, which I think is important. And I give Governor DeWine and now Senator Husted, he was the lieutenant governor at the time, really a lot of credit for creating a great business environment in Ohio.
Okay, so also tell me, why did Bank of Nova Scotia come down, Scotiabank, a good bank, and tie up with you?
Well, I think one of the things that Scott Thompson, who's the CEO of Bank of Nova Scotia, wanted to do is he wanted more exposure to the U.S. So Bank of Nova Scotia, as you might know, obviously a huge player in Canada and a significant player in Central and South America. And I think he felt that having a tie-up with somebody in the States, particularly it's middle market focused, particularly that has capital markets capabilities, particularly it has a big wealth management business, big payments business, I think he thought it was a good fit. We're just starting to scratch the surface on some of the things we can work on together.
Now, what can a president do when it comes to regulation? Is there a way to make it so the regulators are not over-regulating? I know it's hard for a bank CEO to talk about this, but it did seem to me that there's got to be 5 different regulators of yours, and that's not necessarily good for the country.
Well, I'm actually optimistic. Jim, I was in D.C. for 2 days last week, and as I made the rounds, I am optimistic that, and it isn't that anyone in our industry doesn't want regulation.
Yeah,
Safety and soundness is critically important, particularly when you have markets like we've seen most recently. But I think to focus on safety and soundness instead of focusing on a bunch of other processes and procedures that don't necessarily pertain to safety and soundness, I think is great. And I'm actually optimistic.
Oh,
and
good.
I think it's going to be, and that will in turn give us the opportunity to lend more money and to help grow the economy.
Oh, that's great. You know, it's gotten so convoluted. You're the first person who's told me, look, don't give up the ship. It's still possible that we have a light, we don't want poor regulation. We just want bankers to be able to lend and have good regulation from 1 or 2 regulators, not from 5 of them.
Indeed. And so what we really need is balanced regulation. It's important for safety and soundness of the system. And I think we can achieve that and also get some regulatory relief on things that, frankly, don't pertain to safety and soundness.
All right. Well, look, it's great that you came in. I'm a supporter of your bank. I certainly like that yield, too. I don't understand what happened, that all the banks came down, because it doesn't make sense to me. And I like what you had to say about the new regime, because we need banks that can lend. But we need them that can lend. And that's why I thank Chris Gorman. He's the chairman and CEO of KeyCorp, K-E-Y. They report next week, and we'll be certain to catch you up on how they do. Mad Money's back after the break.
Thanks.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.